Debt service coverage ratio, usually by abbreviation DSR or DSCR. It's very similar to if you're buying a house and you're going through a residential mortgage, your debt to income, which is pretty much the ratio of cash available for debt servicing to interest, principal, and lease payments. Usually the higher the ratio the bank provides you is easier to qualify. The average that I've always seen is about a 1.25, and I've seen it as high as a 1.5 to a 1.7. Usually sometimes with SBA, they'll go up to a 1.1, which means they don't have a lot of leeway if you're overextended or over leveraged within the current loans you have, or even your personal loans that's needed to qualify for the business loan. So very similar to the mortgage side, usually basic calculations. If I have $3,000 a month in total expenses, that includes my house, car, minimum payments of credit cards, and that's the equal of $3,000. And my total income on average of a year is $10,000. My debt to income ratio is 30%. There's a different calculation, a little more involved with debt service coverage ratio, but it does make a difference. Now, this is where we come to a lot of challenges with business owners, is that if you make, for an example, $1 million, great. On paper, that looks amazing. Banking calculations take about 10% of that loan. So if you take 10% calculation, bank will give you a $100,000 loan. Now, depending on the interest rate you get, let's just say it's like a 6% interest rate, and that payment is going to be like let's just say $800, whatever that comes out to. So if you deduct 95% of your gross margin here, which that means that you deduct $950,000. That means you only have $50,000 left in income to service that debt. So of that, you have all the personal expenses, etc. That may deny you because your debt service coverage ratio might be higher than the bank's threshold. So they might have to reduce this to maybe, let's just say, $50,000 so that you can afford it. Banks are not in the business of losing money, and they want to lend the money for people who don't need it. All right, so that's a very brief overview, and if you understand a lot of the mechanics of it, some of the lingo, it can really help you make that fine decision when you're submitting to the banks.